if you've got to learn about the stock market in detail, don't try learning it just off of the internet. Try learning it from the experts of that world. Mr. and Mrs. Malkan have been very experienced in the world of the stock market, in the world of making money through the stock market. And on today's episode of The Ranveer Show, they're training you, the beginner in the stock market, the college student, the young professional who wants to expand that skill set. Even if you're an intermediate when it comes to the stock market, I'm sure that this couple's experiences and knowledge will get transferred to your mind and you'll enhance your own skills. Before I let you slip into this episode with Mr. and Mrs. Malkan, I want to announce that The Ranveer Show will be a Spotify exclusive very soon. When it happens, the audio version of the podcast will be available 48 hours before the video version on YouTube. Make sure you follow TRS on Spotify. This is just the beginning for The Ranveer Show. For now, though, enjoy this very special episode with Mr. and Mrs. Malkan. You've got to polish your financial skills using the knowledge of this power couple. Enjoy this episode of The Ranveer Show. Mr. and Mrs. Malkan, welcome to the Ranveer Show. Today I'm just excited as a learner. I feel this is going to be a coaching session for me. You guys are icons when it comes to the stock market, leadership, marketing. Firstly, welcome here.
Thank you so much. Thanks, Ranveer. It's been a pleasure to be on this show, and of course, we'd like to teach you something. You are the youth icon.
I mean, yeah, I guess that's what my job entails. But again, stock market is something I didn't have knowledge about when I was in college, when I was a teenager. And now when I understand personal finance a bit, I look back and I say that, oh, damn, I wish I'd learned some stuff back then. But maybe before we actually get into the ABCs of it, and we'll teach people a lot of what they need to know about the stock market today. But I'd love to know your story. Y'all are the finance power couple. So on your marriage CVs, did you all write, I want someone who's good at finance?
Okay, so let me start with that is because I started my journey into stock trading at a very early age, was 16. I was just out of college. In fact, before that, when I was in 8th grade, and during my summer break, I used to go to my dad's office. It was into textile at Allahbadia in Mumbai. But everybody was talking about stock market because that was the period when that Harshad Mehta thing happened, 1993. And since then, I was so much fascinated by the number game and the whole up and down and those ACC Reliance and all that. And especially thanks to you must have seen that series. It's so nostalgic for me to watch that because I was also part of that. And I decided I want to be a stock trader at that age only. And after 10th, I told my dad I want to be a stock trader. Of course, you know what the answer would be at that time. But I did my trick and I took an admission in a college which was next to stock market called the KC College. My graduation, TY/BCom I did, but more of I was into stock market, less into the college. And since then, I learned these tricks about markets and up and down. And I used to write the prices, open, high, low, close. And that was the raw form of technical analysis. And you would be amazed that by the time I was in TY, which was when I was 20, I made 20 lakh rupees by just trading one simple strategy. And I thought I'm a genius and I'm going to make crores of rupees, and just realized that it was just a bull market and it was my luck. And the market crashed in that .com bubble and I lost that. Plus I lost more money and I was also already into a debt. Then I realized I need to learn. And then there were two parts. One was fundamental, one was technical. So I joined a finance MBA and I started learning technicals through books and seminars. And that's when my real interest started. And I decided that technical looks very simple and easy for a common man. For fundamental, you need to be a finance background. So in my journey that started in that. And between 2004 and 7, I almost read 400 books on stock market, trading, investing. And my first success came in trading when market crashed in 2008 and I was able to predict it. And I did not lose money in that crash. And I realized that I can pass on this knowledge, this 12, 13 years of knowledge to someone. And that's when we started our institute, Malkansview. And we got married in 2007. Let's hear her story.
While this tornado was going on the other end, what happened in your life?
So I was, by education, I have studied law. I did my company secretaryship. I got interested in law. And while I was working in the UB group at that point of time, 2007. So when the alliance came in, so they were actually family friends. So my parents were very keen, that they are good people and they stay around, like family. We know them since years. But as soon as I got to know he's a trader, I thought, yaar, ek satte baaz se, I don't want to get married, yaar. I'm working in a good corporate law firm, and so that was the whole how it all got started. And though he had an MBA finance and he was doing well, but he was ultimately trading, and I was someone who never traded. I was someone who didn't even know what a stock market is. My friends used to trade, but I was completely out of it. So then I said, no, it's not going to be possible. Then followed months of, meeting each other, and he would convince me how, trading is not that bad and I'm not a gambler and you can just see what I'm doing. And then gradually I thought, yes, I mean, the more I got to know him, I said, he reads books, he has varied interests as well. And then only on the pretext of one thing, even if wo kuch nahi kamayega, to I have my job, I'll run the house. Only on that pretext we got married. And then what happened was very interesting. I took a 3-month break because by that time I'd moved on to Kingfisher Airlines, and we were that was the time we were acquiring aircrafts, and it was very hectic. So I said, let me take a break for 3 months, let me settle down. And while I was on a break, I used to see him read charts and do some kind of analysis. And I used to tease him. वैसे भी सट्टा कर रहा है यार, what are you reading? What are you studying and all? So that was, he got very irked. He said, why don't you learn what I'm doing? At least you get to know what I'm doing, the science of it. And that's how I got started. I did a basic program on technical analysis. How do you study charts? How do you analyze markets? And that intrigued me further. I said, this is something which is making a lot of sense. It's not gamble after all. And then I studied more. I did the advanced course. I started to make sense of it. Then I mean, that was a time when I had to go back to work. I told my boss, this is something I have to try. I need to resign. Then he said, I don't know, you can come back. I said, it's okay. Let me try this new career thing. At least I don't know how I'm going to do here. So I took all my money savings, I invested, I started trading. I mean, my journey was also filled with lots of ups and downs. But one thing was starkly contrast to his journey was that he was there to guide me. So the way he had experienced his pitfalls, I was at a much better space. I had a constant guide on what to do, what to read, what courses to go to. So that way my journey was eased out. So of course, a lot of ups and downs, but ultimately I found my way here and found this that, I can make same amount of money, maybe more amount of money, but I didn't have to work full time. I could work at my own pace, and we are avid travelers. We travel a lot. So it's like kind of, you can trade from anywhere. So that kind of gave us more confidence on passing on this knowledge through the institute. If someone like me who can do it, who had completely no background, I'm sure a lot of others could do it as well. And we've had people, we've had doctors, we've had engineers, we've had homemakers, so many of them taking this forward.
I think generally trading is becoming more friendly, especially when we hear stories like this, where you were just guided and you switched professions, sort of. So there's 3 things I pick up from your collective stories. The first is that both of y'all have lived through some intense scams in terms of, y'all have seen it firsthand. The second thing I picked up is that you guys are pretty made for each other.
Thank you so much.
Yeah, and even the energy you all share is very nice, again, maybe that's because I'm in a very shadi karni hai zone in life. So when I see when I see great marriages, it's very inspiring. How long have you all been married?
14 years.
Wow.
Good, you remembered that. I was testing.
There's going to be more questions about this marriage aspect maybe after the podcast. But because we're talking about the stock markets, the third thing I've really picked up from you guys is that there's science to the madness. Because when you don't know much about the stock market, especially in India, our parents' generation will tell us that nahi, it's all gambling, jua hai, don't get into it, it's an addiction. I've heard this kind of stuff growing up. And I'm sure there's kids all over the country right now who've heard similar stuff.
Absolutely. Yeah.
So I'd love to hear the breakdown of the science. So when you were giving ma'am all the dope on stock market on your early dates, what was your first few inputs?
So now we have broken down the whole science into 4 parts. Let me first tell you that there are 2 kinds of sciences. One is the fundamental analysis and one is the technical analysis. Now, fundamental analysis is all about you look at the balance sheets and the ratios and what the company is doing, what the management is doing. Now, this is something which only a person who has some finance background can do it. A MBA, a finance or a CA or something, but not a common man. So the other part of the science is called technical analysis, which is basically just studying the graphs and the charts. You must have seen so many of them nowadays. Even you have a chart of COVID nowadays. So based on that, you see the trend is going down. So that's trend analysis. So if I have to give you the right example and what to the viewers and audience also, that technical analysis is very simple, that it does not require prior background. So the best example I give you, is like, let's say if somebody has a chest pain and he goes to the doctor and the doctor will say, go and take an ECG out, the cardiogram. So it's made up of lines. Based on that cardiogram, that doctor is going to analyze whether he has some disease or not, whether he needs medication or rest or whatever. He doesn't go into why it happened, whether it was because of drinking or sleeping or eating the wrong food or some whatever it is. So even when the stock market goes up or down, you don't look at the why it is happening, because there can be 1,000 reasons for a stock going up or down. But if you just look at the graph, it says, okay, it's going up. There must be something good about it. We don't know. But what is the remedy? Is to buy. Same way doctor will say, okay, this is the thing you have to remedy, this is the medicine, or this is the further test to be done, or the remedy is rest. So in that case, if the lines are going up, you buy. If the lines are going down, you sell. It's that simple. It sometimes looks very simple to be true, but then we have done it for so many years. And I think it is the best way to learn markets. And nowadays, the world is so fast. The markets are so volatile. If you see, the long-term definition earlier was like, ये या 5 साल के लिए ले लो, 10 साल के लिए लो, अपने बच्चे के शादी में यूज करना. That is gone, because the definition of long term has come to 12 months, because you don't know what's happening after 12 months because of the dynamics of technology, the dynamics of the world markets, and nowadays with cryptocurrencies and all those things coming up, anything can happen. The company which was doing well 12 months back will not be there after 12 months.
Wow.
So the only way to do short-term analysis is technical analysis.
So, a lot of people have this mindset, especially people who don't know about stock market. They think that, okay, I'm just going to hang on to these shares of this company. And you're saying we shouldn't do that anymore at all?
Absolutely. So a good company is only one it makes you money. Let's say I give you an example, like so many stocks. We talk about Reliance, the most popular company, was not performing at all between 2008 to 2016. For 8 years, it gave you zero returns on the stock. But we say, okay, it's good company, so I'll hold on to it. But within that 8 years, you would have bought some other stocks and you have made money, which had gone up. Then it's a rotation. Now, if you look at currently, the metal stocks are going up, but they were not doing last year. So you have to know the science of it. Otherwise, you are stuck with the wrong stock and you think, oh, markets are going all-time high and my stock is not going up. So you need to know the trend of that, and also need to know the exit of that.
Got it. So if your goal is to make money from the stock market, you study it. And if something is stagnating, don't just leave your money there. Then your money it's as good or as bad as lying in your bank account.
Absolutely.
Yeah. It's like, people getting married to stocks. They cannot sell their Reliance. They cannot sell their L&Ts. It's that way. You get married to a stock, and then irrespective of the stock giving you return or no, you're stuck with the stock for years. You feel good that you're owning it, but in real, it's not generating any value for you.
So we had the Zerodha founders, Nikhil and Nitin Kamath, on the show. And what they mentioned about the stock market is that you need to play it like test cricket compared to T20. You can't play like big gambles and all. So coming back to you, sir, when you began trading again, when you were in college, you said you made 20 lakhs and then you lost all of it. I'm sure you were playing T20 cricket.
Yes. Yeah. Actually, we use this example in our trainings also. In fact, we recently had come up with a program called Option Premier League, like an IPL, OPL. And we said that we use all cricketing language. And let me give you one strong example or strong analogy of how you need to treat stock market. Stock market, as you said, is need to be played like a test match. And who's the best test cricketer in India? Who was like Rahul Dravid, right? So what is the main forte of Rahul Dravid is he stands on the pitch. He doesn't lose the pitch, means he doesn't lose the wicket. So what is the idea is most people come to stock market, they want to make money immediately and fast, like quick rich. But if you think about staying on the pitch for some time, gauge the pitch, gauge the bowler, gauge the runs, and then you make runs slowly and steadily like a test match, then you will survive. So for us, our wickets are our capital. Before you learn the magic of stock market, you have to protect your capital also.
Your initial money that you're putting in?
Yes, the investment.
But how do you do that?
So we have to have something called, like, let me break down the 4 parts we are talking about: the tools, the trade, the risk management, and the emotions management. So emotions is her department. So tools is like we use in technical, there are certain tools like you use candlestick patterns and RSIs, indicators and momentum. Those are the tools that tells you whether the stock is strong or weak or is going sideways. Then there is a trading system. What is a trading system? It's like a process. Process means, okay, if this happens, we buy. If this happens, we sell. So when you have a systematic approach, when you are process driven, you are not taking any decision on gut feeling,
On instinct.
on instinct.
It's science behind
It's
the
science.
matter.
Okay, then it's like you go to McDonald's and you have French fries. You have French fries everywhere in the world. It tastes the same. Why? Because it is process driven. The same machine, the same kind of process. If you have the same process in stock market, it actually becomes boring. And really, when money making becomes boring in stock market, that's when you really make money. But most people come to stock market is for the thrill element.
Wow.
You want to have that ride thrill. What is the definition of thrill? When the things are uncertain. You don't know how things will pan out. But if I'm following a process, then I know that after this happens. After this happens. Either I'll make this much money or I'll lose this much money. And that's the process-driven thing which we bring out to this. That means it reduces some part of the emotions also. I don't need to think, should I buy or not? Today, some people are, I feel good today. Let's buy. It's my gut feeling today. आज मुझे ऐसा लग रहा है कि ऊपर जाएगा तो मैं buy करता हूँ. That लग रहा है नहीं आएगा. It's just system says buy, then buy. System says sell, then sell. System says book a loss, then book a loss. System says book a profit, then book a profit. Once you learn that, then it's just a normal day like any other business. And the third part is called the risk management. So before I enter any trade, which is maybe a long-term, short-term, medium-term or day trading, I need to know how much I can lose my money, how much I can go wrong on this. Because that's the only thing which you can control in your market. You can't control what others are doing. You can't control the profit. You can't control the market going up or down. You can only control where you buy and where you book a loss. Not even the profit, just the book a loss. And that's where the key is. When you book a loss, you are actually protecting your wicket.
Can you explain this further, sir?
Okay, let's do this. Let's say I buy a stock at 100 rupees. Okay, I tell you to buy 100. What would be your natural question coming to me next?
That is it going to go up? Is it going to go down?
How much it will go up, right? And I will say 200. And you will say, you'll be happy, it's going to double. Right? But can I guarantee 200? Can anyone guarantee 200? Nobody. But let's say if it goes to 80 rupees, what would you do?
I'd say I want to take my money out.
Yes, most people would say, okay, I'll wait.
Okay.
It's a temporary correction or it's going to come up again. It's the virus thing or some of the other logical rationalization of the loss and you hold on. What happens is when you buy at 100 and when you book a loss at 80, basically you are mentally taking a defeat.
Oh, okay.
And people don't take defeat because since childhood we have been taught that you have to stick to it and you have to hope for the best. That hope for the best goes in the wrong direction in stock market. Then it goes to 50 and then you try to average out. Let me buy more so that my average comes down. Then it goes further lower and then you become a long-term, मैं तो long-term investor हूँ. That's how most long-term investors are produced in market. Because you are not able to book your loss at 10 rupees. And if you had booked your loss at 10 rupees, you have saved your capital. You can go to the next trade. But because you're stuck here, you can't go to the other trade also and your money is stuck, your mind is stuck. And that's what I mean by risk management, that before taking any single trade, you need to know the risk of it, whether it's short term or long term.
You mentioned averaging out. Could you explain that concept?
Okay, let me give you the best example right now. The big frenzy right now is cryptocurrency, right? And everybody's like mad behind Bitcoin and Ethereum and all that. Now, I'm personally not in favor and don't trade cryptos because it's not regulated that much in India and don't understand much. So, and my friends are trading and my brother's in US and he's also trading and all. So it went up to 65,000. Now, some people would have bought at 65, thinking that it's going to 1 lakh. Now it comes to 50,000. Then what you do is you are averaging and loser. Market is saying you are wrong. When market says you are wrong and you still add up to your wrong by buying more, there is no guarantee that it's going to go up from 50,000. Then it goes to 40,000. Then you buy more. So in our trading psychology or the trading game, we have this thumb rule: never ever average a loser.
Got it.
You don't average a loser, you average a profitable trade. Like let's say if it has gone from 65,000 to 75,000, I'll buy more. Even if it comes down, I'm in profit. But if it goes up, I'll make more money on two parts of my positions. So that's the part of where you, as an audience, if they're listening, they should never ever average a loser in your trade, whether it's crypto or stock or option or future or long term or short term.
But okay, again, so if you're explaining this to a college student, what is averaging out? Like, could you explain the ABCs of averaging?
Averaging is like, let's say you buy a stock at 100 rupees, 100 shares, and then it goes to 80 rupees. You buy another 100 shares. So your average becomes 90 because you bought at 80 and 100. But your average is still above the price. Your average is still below the current market price. That's why you're losing money. And if it goes further down, you lose more money.
And so what about this logic of, how people say you buy when things are low and then you sell when things are high? This is like a very traditional textbook stock market funda.
It's actually, I would say it doesn't work at all. Like it's like, let's say, it's like betting. We have been, since childhood, we have been trained to like bet on the underdogs, even in movies and cricket. Let's say if you are watching a Australia and Kenya match, you'll wish that Kenya wins. Right, and that's why we select a stock which is going down. Like, or if I make money in a stock which is going down, I'll feel good also because I betted against the odds. Let's say if I try to tell you buy the stock which is going up, then it's no brainer. Right? Everybody's buying it. Everything is going up, and you feel also that okay, it's going up. It's expensive, right? This looks cheap, and since childhood, again we have that saving money discount sale offer. That stock was now Bitcoin was 65, now it's 40. Let me buy it. Then it goes to 20. It's further cheaper. Then I'll buy it more.
So basically, if you're betting on Australia, there's a chance Australia can win you the World Cup.
Absolutely. It's a no-brainer.
Okay. So the next obvious question is that, say you have 10,000 rupees. You're a college student and your dad has said, take this 10,000 if you want to begin your stock market career. How do you actually begin? How can you turn 10,000 into 1 crore?
Okay. 10,000 to 1 crore is a long journey, but it's possible. It's possible with the right, of course, the mindset and the right strategy. And then, of course, comes to the right implementation of the strategy. The implementation part is where most people fumble. Like, you know what? Everybody knows how to lose weight. It's a very simple science, but most people can't do it because of whatever mindset problem you have. You have to be disciplined. You have to be like determined. Then only you can do it.
Consistent.
So, consistently, yes. So if a youngster who's watching it and he's trying to build a career in stock market or be it in finance, first of all, first thing is called as something called as education. Like you become a doctor or an engineer or a lawyer or a chartered accountant, we spend 3 years to get 1 degree. So how about spending 1 year or 2 years to learn stock market? It's also a profession. If you take it as a profession, it will become a profession. If you take it as a gamble, it's a gamble. Right? So that's the first thing I would like to try to learn. And nowadays with YouTube and this Facebook and all, there's so much of education, free education available about stock market where you can learn right from the basic and then understand what is a stock, what is finance, what are companies, what is technical, what is fundamental, and then try to gauge it and slowly. There should not be any hurry to get into the market. First is the education part. It's like before you get into the main cricket, you do some net practice on the main match. So net practice is about practicing on the behind. And then you enter the market. And with 10,000, I think you can buy stocks in equity, which are like positional or long-term sectors. And also you can put some money in mutual funds also, because there also you can play based on, let's say now pharmas are doing good, so you can select a pharma fund, or metals are doing good, you can select a metal fund. But again, you have to educate yourself about mutual funds first. And know the risk part also, that, okay, if I lose money, I'll get out here.
So what I've gauged from all of this is, again, to learn about the stock market, you do need a long learning curve, which includes experience, it includes reading, it includes mentorship, all that. And you guys have boiled it down to these 4 steps.
Yes.
I'm sure y'all have drawn out those 4 steps after years of experience.
Absolutely.
Which brings me back to those 4 steps. Again, this is from the perspective of that kid with 10,000 rupees.
Right.
To give that kid some perspective, so that tools aspect, how did you all actually develop the tools? And like, what is the tool? Is it a computer program? Is it some sort of mathematical formula? What is it?
All right. So when it comes to tools, there are technical analysis is now available freely on all websites. You go to investing.com or any other website, Money Control and all. So if you see the chart, you must have seen that like a mountain chart. Then you convert them into something called as candlestick chart. Okay. Candlestick is like green and red, those bodies, like looks like candle. That itself, each candle refers something. Like it gives you some information about bulls and bears in the market. And then there are certain more tools like moving averages. Then there's some tools like called RSI, the Relative Strength Index, which we specialize in, which tells you the speed of the market. Like you have a speedometer in your car, it works like a speedometer on the chart. So it will tell me whether the trend is going fast or slow. Should I buy more? Should I sell? Should I exit? Should I avoid it? So that's the speedometer. These are the tools. So, and there are hundreds of tools, hundreds and hundreds of tools. So I believe that what we learned from our coaches, earlier when I started, I was doing too many tools. And then I learned from one of the best traders in the world called Larry Williams. Let's go deep, not broad.
As in, like, learn one
Master
tool.
one tool. And our specialization is in RSI, which is a tool which tells us the trend up or down, which I use for day trading also, which I use for long-term trading also, which I use for options trading also, and futures trading also. I can use that on crypto also. So it's a tool which will tell you the speed of the market.
Got it.
Right? And if you want to make money, if you want to be in the right stock, you need to check the speed of the market. It's going up or down or sideways. There are three trends. So if you want to buy, you have to see a stock which is going up. Again, in that, if I go further, the charts which are seen is like a daily chart, weekly chart, and a monthly chart. If I'm a long-term investor and I look for a few months down the line, I look at a monthly chart. If I'm a short-term trader, I look at a daily chart. Okay, I want to trade for 5 days. So I need to see that tool on the daily chart. That's what basically means by tools. And there are many of them, but select any one of them. This we have not developed. These are done by so many people in the past. It's there since 50, 60 years. We just have done some more improvisation of that, make it more simpler. Our main forte as a Malkansview Training Institute, the USP is simplicity. And I learned from one more coach, is that he said this nice statement says, if you want to impress someone, make it complicated. If you want to help someone, make it simple.
So again, average Indian thinks of stock market as high risk.
Yes.
And even after you use the tools, there is a risk, but the risk is minimized a lot once you learn one tool really well.
Yes.
So maybe the first step before you actually spread out your 10,000 rupees is understand what tools are available. Probably do a course. Like you guys have a course as well. Like
Yes.
With Malkan.
Lots of them. Yeah. In fact, we'll offer one free on your channel. You can just go there and select one and you get an access to a free course which teaches you the basics of stock market.
Why do you have lots of them? Like in terms of why do you not just have one which says, okay.
It's like you go from a normal MBBS to a heart surgeon to a next level. Like you need to go to the next level. Some people just want to do as a part-time thing. Like, okay, I'm having my job. I want to have a business. I just want to do parallelly trade. Some people say, I want to switch. Like she switched completely. So then we need more tools to understand options. We need to understand futures. These instruments are different. Their market movement or what we call as volatility is different. So we cannot apply the same indicator on the same tools, same instruments. So we have to have few of them. And then it takes time to master them. So we have a 1-year program also, but we have a 2-day program also. So that's...
Do you think, ma'am, that again, because you come from the psychology aspect of things and you switch from law into this, in the same way that there are some people who are better batsmen than others, are there some traders who are better traders than others? Is there some natural talent also that comes in? Or can everyone become a Virat Kohli of trading?
There are some people who are better trader than others and who can invest better, take better decisions. But what separates them is not natural talent. What separates them is the work that they put into this thing,
Into learning.
Because we have clearly seen more than 12 years we've been coaching people into full-time trading, which means we have this 1-year program that coaches them on all the 4 steps. So one stark thing that separates the two kind of people, people who do really well and take the maximum advantage and make more money versus the people who are there but they're not able to cope up, they're not able to make money in spite of, they wanting to do that, is the category 1 people. They really put in the hard work. They read the books we ask them to read. They do those exercises. I mean, they're fully present into the course and they give it their 100%.
Could you guys recommend some books just for the average listener right now?
Of course, we would like to first recommend our own book. We have published a book called #Cashtag, which has my 25 years of journey in trading, plus 4 tools explained in detail, plus 6 stalwarts of the industry interviewed in that, including Ramdev Agarwal and Dr. Van Tharp, Dr. C.K. Narayan have been interviewed in that. That's the first book. That's our book. And there are a few books which I would recommend is called Technical Analysis by John Murphy. He's a legendary author and great stuff, simple language. Then there's one more book called Trading for a Living by Alexander Elder. And there's one more book called, if you are into short-term trading, then Long-Term Secrets to Short-Term Trading by Larry Williams. And there's one super book called Super Trader by Dr. Van Tharp. So I think if you read these 3-4 books, you'll get the gist of what we are talking and get a fair idea about markets.
Coming back to the kid who was 10,000 rupees, because I feel we didn't completely address that question, because I love your knowledge, so I also want to take you on tangents. But you said that with the 10,000 rupees, initially learn a little bit about mutual funds. Mutual funds are another way to kind of reduce your risk, at the same time make money off of the stock market. So would you say like put 3,000 to 4,000 rupees in mutual funds out of that?
Yeah, I think you can put 3 to 4 or maybe 5,000 also, because while you're learning equity has a chance of loss, and you'll have your fumbles and you'll have your blunders also to understand. So it's always good to do mistakes with small money, right? So when you do those mistakes, and you also consider by learning, you're also paying some fees to the market to lose money and understand the market. No matter how much you learn from our courses, you are going to still lose money in the market. That will be your teaching fees for the market. So 50% mutual funds and 50% equity. And in equity, we'll stick to as the amount is small, you can't do futures and options, which is slightly on the higher capital requirement. Then you can buy one share also. In equity, like you buy one share of Tata Motors or you buy one share of Tata Steele. And that gives you you are just stepping into the water and test the waters. And slowly you can build portfolio. And I again encourage, we have this youth thing coming up very soon, and we want to highlight this thing that youth nowadays, I see mostly they spend so much money on video games and gadgets and iPhones and all that, and the same money, if they try to put into some investment and learn this skill, that will be a great benefit. They'll have a strong foundation. You know what, for us to teach a person who is 50-year-old is big pain. Because it comes with so much of baggage
and preconceived
notions about stock market gamble, or ऐसा ही होना चाहिए, तो ऐसा नहीं होना चाहिए, and all that, and they are not easily coachable. Of course, I'm not saying about everybody, but it's difficult. But if you coach a teenager who has a plain background or a clean slate, I think it's very important and very powerful for them to put the right foundations. And as he said, the right belief system has to be put into that. Stock market is not gamble. It's a systematic approach towards trading and investing. And if you do it right, you can make a lot of money. So with that belief system, that kid has a bright future to understand. And then get into I believe that we have this teen success pyramid, if I can talk about that.
Sure.
3 things which needs for a teenager to get successful. And one of them is the belief, what you believe right now. Is that there's a power of conscious mind, what she's talking about. The habits of investing and saving at an early age, and many other habits, like reading is number one habit of all successful people. I'm sure you are also the one. We are also one. So that habit. And on the top is the skills. Learnable skills. Stock market is a learnable skill. High income skills. So if these 3 things are in place, then the success comes. Let's say there are so many people behind skills. Oh, I want to learn this strategy. Teach me RSI, teach me advanced options and all that. But your belief system is not right, or your habits are not right. You're not going to make money with the same strategy. As she said, some people make money, some people don't. Strategy is the same. You're going to buy at the same level and sell at the same level. So why most people are not able to do it? Because they don't have the right belief system, which we talked about, the mindset part.
So coming back to I have to break down the 10,000 rupees.
Okay.
What you invest in the stock market.
Okay.
You mentioned Tata Steel and one more company.
Tata Motors.
So I'm sure you're not recommending that people.
Exactly, that's what I was saying. It's not a stock recommendation. I just gave an example.
Yeah.
That's.
But can you explain the logic behind the example? Why you gave these 2 companies versus
Okay,
others?
so if I look at the technical part of it, when we look at the charts, the graphs of Tata Motors or Tata Steel, then I go into the detail that where their monthly charts and the weekly charts are bullish right now.
As in they're going up.
As they're going up, right? Especially Tata Steel right now. So that means I will invest in that. And also it doesn't mean it's going up, then it will go up forever. So I need to decide when it goes up, where I'm going to buy. And if my analysis goes wrong, based on the tool and indicator, where do I book a loss? If those 2 things are clear, then I will invest, and then I'll wait if it goes up, I don't need to worry about it, because profit is not a problem, loss is a problem. Like that, you identify more stocks. And this will keep changing as the market changes. Let's say 6 months down the line, Tata Steel starts coming down and Infosys starts going up. Then I had to switch from here to there.
Always try riding the green waves.
Yes, absolutely. That's the best quote.
Like you spot green waves and then think of where the next one is. And you pull your money out of maybe a less kind of steep green wave, put it on one that's more steep.
Yeah. Yeah. And that's what you always bet on Australia, not Kenya.
Or the team inform. If India signed a win a lot, you say, okay, wait, now India's winning more than Australia. You put your money there.
Yes.
Something. Okay, cool. And again, this is going to come through observation also. So after you've learned, probably the kid has to like observe the stock market regularly. How do you improve that observation skill? Do you watch all these TV news channels? Do you watch YouTubers?
That's a big discussion. Of course, we both have been really regularly appearing on channels, the top channels, business channels. But at the same time, it's again like YouTube.
There's too much info.
Too much information. Like, let's say I'm on TV and I'm talking about a stock and I say buy this XYZ stock. And my perspective is for the next 5 days. You are looking to invest for the next 1 year. You are listening to me. So you got the wrong information, right? And it's all haphazard manner. So in fact, as a rule in our programs, we give it a strict instruction not to watch TV, not to watch any news channels or nothing against them. Of course, I appear on them, but it's like you get lost in the information.
Maybe once you're an advanced trader, then you can watch.
Then you can actually make sense out of it. As a beginner, you will think, oh, he said, then I should buy. But he's talking from a short-term perspective, maybe for tomorrow only. And you are thinking, I want to invest for 1 year. So that is not clear because that is not the time they have to explain on TV that, okay, this you should buy for this many period. They're just talking about tomorrow and day after. That's the thing.
Ma'am, so what did you do when you began observing instead of watching news channels? When I'm sure your husband was watching news channels because, he was an advanced trader when you were just starting off. So how did you observe?
So I basically used to observe only from practice. So I used to kind of, get homework from him every day. That this is your homework for today. You need to. There's something called as when you're trying to learn a tool or a strategy or a method or a system. What you do is you have to go back into the past and you have to check it, how it works. It's called backtesting.
Reviewing your own work.
Yeah. So you have to kind of figure out that if I have to have the system to buy at this point, how did it work in the past? Because technical analysis is like, studying the history. You're studying the past. When you study charts, you study the past, right? So basically, it's that kind of work that you have to do. Keep on studying it more and more. When you say go deeper, it means exactly that. Put in more hours of study of how it worked when the markets were up, how it worked when the markets crashed. So that's the more number of hours need to be put in there. That's when your expertise comes in.
Got it. So say the kid, again, coming back to that kid's example where he's invested in 2 stocks and say they both...
Yeah, I was just coming there. So suppose, if the kid is studying that this is my 5,000 rupees and these are, how do I put it? Which stocks do I put it in? So that's one you have to do where, suppose you are studying with RSI, for instance, what he said is. So if you have, which is the best stock that shows up best on RSI on discount, you have to go back and study, put in hours of analysis, which is the best stock to buy. If you get 5 best stocks and if I just have 5,000 rupees, I just need to invest in 1 stock. So which is the best out of these 5? So that kind of requires, and this is why people don't get into it because it's a lot of work, right? It's a lot of, you have to put in those hours. Yeah.
Like you have to just stay active, ready to pull out your money from one place, put it in another.
And you have to do the work. You have to go and analyze and do it yourself.
So the other thing which comes up with the stock market, the common belief, it talks about easy money and quick money.
Yeah.
So we get so many requests that do you have an advisory service? Like there are so many advisories, just send you a message, buy this and sell that. So we said we don't do advisories, we teach you. Once you learn, you can do it for the rest of your life. Yeah. We are giving you the fishing net, not the fish. Yeah. But most people refrain because it requires that kind of work what she's talking about. And in that work also you'll fumble and you lose money, right? But then you learn that skill for lifelong. It's one lifelong skill which you can get, and stock markets never get shut. Even in the pandemic, not a single day stock market is shut. It's the only online income which you can do completely online, learn online, trade online, make money online. So, and nowadays, thanks to this pandemic, so many people have woken up to the stock market thing because it is online. You must be seeing so many ads coming up on channels and TV and all that about markets. But the problem is, right now the markets are going up and everybody's buying. It's like what happened to me in 1995, 96. Markets were going up, I was buying and I made money and I thought I'm a genius. Only to realize when it crashed that I'm not a genius, it was my luck. So the same thing will happen. It is a cycle. Market goes up and then goes down. When it goes down, at that time, if you can put a stop loss or you can exit and you can make money, then you are an expert. Yeah. Otherwise, in a bull market, everybody makes money.
Does history repeat itself in the stock market?
I would say absolutely yes, but not exactly in the same fashion. if you see the crashes which has happened in the past, be it 1992 or 2001 dot-com bubble or 2008 the subprime crisis or to 2020 the COVID, the reasons are different. But market did crash for some or the other reason. And in that crash, how you can protect your wicket, which is your capital, that's where the key is. Right.
So again, I'm going to boil down some of this information from an amateur perspective. And this is combining some of the stuff that the Kamath brothers also told me with what I've learned through you guys. Initially, you put in a lot of work to study, to learn, to do courses, become very equipped. Like, go to your gym, go to your mind gym for the stock market.
Yes.
When you're actually beginning to trade, you reduce your risk a little bit by putting some money in your mutual funds or what people call low risk options. Then like the money that's remaining, you put it in the stock market in tiny, tiny amounts.
Yes.
And through those tiny amounts, you'll get some sort of learning. You'll understand how things work. And you shouldn't look to make money initially. You should look towards making mistakes and quickly learning from those mistakes.
Yes.
Absolutely.
Okay. Would you add anything else to this strategy?
Okay. And one more thing I would like to add is give some time.
To yourself.
Give a horizon to yourself. Like that, okay, I want to be an expert in stock market in the next 1 or 2 years.
That it should be a 1 or 2 year timeline.
Minimum. It can take longer also, but if you think don't think that I'm going to, of course, we may do a 2-day program or a 3-day workshop, but that doesn't mean you start from the 4th day and start making money.
So I'd like to add one thing, like you said, give time with a sense of belief that I'll be able to do
Absolutely. Absolutely. That's the most important part. That's her job to put that belief in your mind that, okay, you can do it. So when we do this workshop, it's less of technical and less of strategies. It's more of the mindset that first believe that, okay, it's possible. It's a scientific way to make money and you can do it. It's a learnable skill. And if you sustain for a period of time, you will make money. That kind of belief system gets into your head, then the strategy will work.
Hey guys, so that was part 1 of our conversation with Mr. and Mrs. Malkan. That was all the basics. In part 2, we take on your questions from Twitter. We take on slightly advanced concepts when it comes to the stock market, and we talk a little more in detail about making money through cryptocurrencies versus making money through traditional means like the stock market. Look out for part 2.